it's just hard to say how they're going to treat this, but the numbers don't lie.
Hi, everybody. Welcome once again to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to visit with you about ag-related issues and market activity. Well, today I call on Relph of Comstock Investments. We'll do a weekly recap of what occurred in the ag commodity trade. And we ended with a flourish in the livestock trade, and we kind of fell out of bed over on the grain side here, Eric, on Friday. So let's maybe start with the winners. We'll talk about the positive side first. More new record highs. How are we doing this?
It's unreal. I started to refer to it as a runaway train and altered to a rocket ship that has an endless supply of fuel. It's unbelievable what we're seeing and hearing. Trading higher to start the day today was a bit of a surprise because we do have cattle on feed coming out after we record this. And I thought between that, the amount of profit that the funds are sitting on in their speculative long position, and the fact that we were ending the week, culmination of the three, maybe we'd see a little profit taken off the table, have a little softer session today. And then I started hearing cash reports, and it was unreal, bordering on ridiculous. And those numbers varied depending on where you were at. Most of the Southern Plains trade was actually done the first half of the week at steady to $1 higher. And then this northern trade today just caught fire. We saw a 210, 212 live, and we saw 330. I had one client call me. He said, well, actually I called him, but when I called him, he said, I just sold cattle for 330 picked up on the grid. So he's getting 330 in the meat picked up from the farm and gridded. So he'll get a little grid premium off these cattle as well. Works out to about 210 by the time you do all the math and work it back. But just incredible, $6 to $8 higher in the north. So what's the Southern Plains going to do to start next week? Are they going to take the cue from the north and hold out for some higher money, or are they going to give it away and take basis? Now, most of that basis has been stripped away because actually we have February live cattle at a higher price than Southern Plains cash trade. So,
well, I keep thinking back to, the higher they are, the harder they fall, or something like that. The bigger they are, the harder they fall. It makes me really wary of when this thing does decide to turn. I tell you what, that thing could be an avalanche, couldn't it?
Yeah, terrible. It could be absolutely devastating to a lot of people. And I don't know from what level. I don't know what the timing is going to be. This cattle on feed report will be somewhat relevant, but we do get inventory report next Friday. That'll be a big deal because that is now an annual report. We can't afford to do one in July anymore. So we'll get that one report in January to show us our cow herd and see what things look like. But it's hard to say at this point because now you've made new highs. You've taken out a barrier that's been in place forever. That $2 April, that was a big deal. And we blew through that today like it wasn't even there. And now what does that project to? We really don't know. I mean, you can do leg measurements on the charts and you can do retracement advances and kind of see, maybe what does it look like? And honestly, it's frightening. If this thing keeps running, we're talking a 220 board, something like that. I mean, it's just incredible.
Yeah, I mean, we don't have anything to measure it against, and we have been in an uptrending channel for quite a while. We were bumping our head up against it on Thursday, actually broke through it a little bit. And then, boy, we had confirmation busting out of it to the upside on Friday. And like you say, if you measure the width of that channel on top of the channel where we are now, I mean, that would project several dollars higher, like you alluded to.
Yeah.
But that could happen in one day, couldn't it? Next week.
Yeah. I mean, we could see this thing blow off and run for a day or two and fall like a rock. I mean, anything can happen from these levels, and we don't know. As soon as funds start taking profit, they're going to hit the market hard enough where it's going to get people running for hedges at a time when maybe they shouldn't. But that's just going to, like you said, it's just going to avalanche.
Think about it, Eric. I mean, we come back next week and it's going to be almost the end of the month. Mm-hmm. Isn't there going to be a lot of profit taking?
You would think. I mean, and you've, some of these outfits have fiscal years that are staggered a month. So you're going to have some fiscal year end stuff going on as well. And, it's just hard to say how they're going to treat this. But the numbers don't lie. And based on what I'm hearing from the countryside, we're not ready to start pulling cattle off wheat yet. And some of these sale barns are going down to every 2 weeks rather than every week. So they'll have higher volume every other week here for a little while until those calves start coming off that wheat. I don't know where the supplies are going to come from that's going to hurt this market at all. I don't know where it's going to be. You can't leave yourself unprotected, not with this many dollars out there. But I also don't see the fundamental trigger that's going to put us there.
How do you do that? With options or what?
Anything to leave the top side open. I mean, I'm either going to use put options or LRP insurance, something that leaves the top side open because maybe it's got a lot of fuel left. I don't know.
Well, if you look at a feeder cattle chart, let's see, what am I looking at here? I am looking at March. And now it also broke out the top side of an uptrending channel by just a little bit, but nothing like what we had on the live cattle, but it still looks incredibly overbought, doesn't it? And if you look at stochastics, et cetera.
Yeah, exactly. I mean, your RSI and stochastics are way overbought. There's no question about it, but they can remain overbought for quite a while. So it's just kind of hard to tell. And I'll throw this up for the visual of what you're talking about there, so the viewers can see. If we kind of take that one pop out of there, that's a generalized trend line, but yeah, it's pretty remarkable. And then on the live cattle side, I keep referring to the April just because it's probably the most important contract. And like you said, it's a lot more substantial there because you had this, and I could go back further with that and probably about to this gap level would line up. But you can see, we just blew it out anyway. It's unbelievable trade that we're seeing here. And it's warranted by the cash market. I don't know what our weighted average will end up being, but it's remarkable.
Well, you talked about the cash cattle and the live cattle markets coming together now.
Mm-hmm.
What about on the feeders? What about the feeder index? How does that compare to the feeder futures?
Actually, we now have the board at $1 premium to the CME cash feeder cattle index. And we actually saw a little bit softer trade in the feeder barns today. So I wouldn't look for that to move much in the next 24 hours. Well, by Monday, I guess I should say. And so I think we're pretty well in line there.
Well, when I spoke with you a week ago, we talked about whenever that spread would reverse, that might be kind of a caution signal to you. Do you still feel that way or not?
I do. My only question is will the Southern Plains feeders follow what the North did this week? So if we see that $6 to $8 jump in the South next week, then cash is still holding the premium on a weighted average. Right now, we're about in line. So we're just going to have to see what the MS shows as a weighted average for this week. We won't find that out until late Monday. We're also going to have to see what this cattle on feed report says this afternoon. That'll be a big deal coming into Monday morning's trade, obviously. So a lot of balls up in the air, and it's going to take a couple of days into next week before we start to sort them out.
Of course, we had the brutal weather over the past week, not only in the Central Plains, but in the Deep South, historic record lows and everything. But anyway, it sounds like things are going to moderate, so we'll see how that affects the markets next week as well as we get to the end of the month. I want to talk with you about this grain market activity. Double-digit losses in the beans and in the wheat. Corn was down a little bit on the day. How do you read the tea leaves over here on the grain side?
I think it's politically driven. I think the trade is making note of what's being said. Yesterday, you had Brooke Rollins talking about if this happens and that happens, then they'll give, we affectionately call it Trump bucks, but government assistance to U.S. farmers who are hurt by whatever happens with regards to tariffs and those situations. And I think more than that, even now, it's that Congress is proposing bills that would decline or degrade China's trade status as early as March or April. And if that happens, then they would automatically have an increase of 35 to 100%, depending on the products. And then they're going to retaliate. And what does that mean for the U.S. farmer and for how long? The government doesn't react usually real quickly. So there's going to be some sting here. And so I think you saw some preparation, some hedging, and eventually these funds will have some excuse, whether it's Brazil or this geopolitical stuff, to take some profits off the table. They always do. Just don't know when or what's going to be the trigger.
And that would put us right in the middle of South American harvest, wouldn't it?
It would. And it would put us right in the middle of acreage intentions.
Oh, good point. Now, when do we get the the USDA projections for acreage. Do you know when that is? Is that early in February?
Mid-February is the Outlook Forum, I think is what you're referring to. So that's in mid-February. I'd have to look on the exact date this year. I haven't done that yet. But then we get, of course, the intended acreage report the end of March. So both of those become kind of a big deal.
Absolutely. Okay. So is there anything that needs to be done with these grain market prices? I mean, considering where we were 3 months ago, this still isn't bad, right?
Yeah, that's right. Of course, we were saying that a year ago in cattle, right? It's hard to tell what's going to be the right answer, honestly. But July can't seem to break through $5. We've bumped it. We can't sustain above it. We were talking about $2 April fat cattle doing the same thing. They finally did it today. Can the corn do it at some point? Don't know. It's going to depend a lot on South America for the next 30 days. If they stay hot and dry and have adverse conditions for the safrinha planting season, then we've got cause for higher trade. The other thing that's been looming around and nobody's done anything official with it yet is that with Trump putting pressure on Russia to end this conflict with Ukraine, the initial rub would be, okay, well, everything will go back to normal and our wheat prices are going to get hurt even worse. But Russia's been fire selling this wheat to pay for the war. And if they're going to go back to a normal price structure, then that would be beneficial for the rest of the world as far as the import market goes. So being able to sell that product, it would be hugely beneficial. So there are stories out there that could spur this thing, but none of them have come through yet. And then, of course, we've got to get into 2025 planting season and find out if we're going to have trouble with an 89-year drought cycle.
All right. Well, Eric, as you mentioned, as we were recording this, it was right before the cattle on feed report came out. We just necessarily had to record this ahead of time. But we will have a regular trading week next week, I guess. But you have to keep in mind that we're going to be at the end of the month and we're going to have some things to consider in that regard, right? Maybe some deadlines to keep in mind.
Yeah, I mean, we're going to have, today was February option expiration. February isn't a heavily traded option month, but as we come into the end of the month, which is next Friday, we're going to have to keep in mind that we do have January feeder cattle on the board. So we're going to have to be watching closely to the index. They are pretty well in alignment right now. Shouldn't expect a lot of movement out of that. Again, dependent on what this cattle on feed report shows. And I would suggest that anybody who hasn't already, go get a trial of the report where we'll dissect all of this stuff. The Comstock report, that is, where we dissect all of these USDA reports, including the livestock. So be worthwhile to do that, especially where we're coming up on the end of the month and some fiscal year ends as well.
Absolutely. All right. Lots of premium content available through Comstock as well. Check it out. Well, thank you, Eric. You have a good weekend. Eric Relph with us of Comstock Investments. That'll do it for this episode. For our producer, Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.